Saturday, March 21st, 2:50 p.m. New York time. Welcome back, investors, to Morning Wall Street's Money. Hope you had a wonderful week. Going to go over the major U.S. stock indexes, looking at multiple time frames, looking at the monthly, weekly, and daily. So we can see a broad perspective of where we are and how we got there with these major stock indexes. This new week we're about to start, come Monday, will be the last full week of the month. And then after that, we'll be starting the last few days of the month. Since we're in March, going to be ending March soon, that means we'll be ending the first quarter of the year. Window dressing. Have you heard that term? I've shared lots of insight, deep insight, many times in the past. But briefly, I'll just tell you this. The last few trading days of this month and the first few trading days of the new month is that window dressing time frame. If you're investing money, dollar cost average, every week or every 2 weeks or every month into a long-term investment fund, using a financial institution that manages other people's funds, maybe through your employee 401k, maybe also additionally in your own public personal IRA or some kind of investment portfolio you have. Well, the companies that manage other people's portfolios, let's just go as an example here, mutual funds. You might get your mutual fund into your IRA or your 401k or some other retirement thing. Those companies managing those 401ks, those IRAs, those companies doing the mutual funds have an incentive to market themselves at being the best in the game. Yeah, so they may take positions they hold and put them on off-book balance sheets, creative accounting, so they don't appear in their quarterly reports, and put them back on after shady bookkeeping. Plus, some of them will take on positions that are the best performers for this quarter, but they're acquiring them late in the game at the highs. But when you read the perspective, you just see that they have them, not to know the day they got in them. Yeah, you might see the volume they own, the amount of shares, but not necessarily the date they got in them. Again, misleading, sharp marketing. Again, they might get rid of the losers altogether out of their portfolio of nest egg, so you don't see those losers. That's part of it. But what happens also is investors make contributions out of their payroll. Some of them have it scheduled the last few days of the month. Some have it scheduled the first few days of the month. And some do it mid-month. So that being said, we're very close to getting to the end of the month. So that'd be a load of money going into the markets, and those managers have a mandate to be a certain percentage invested in the markets. And then again, like I said, the first few days of the month, there's also people that make contributions from their payroll into the investment. Think about it. That's a lot of money flowing into the market, buying, because they're doing dollar cost average. Not taking consideration if the market's at the highs or lows of any duration. So that could lead to a short-term pump in the market. Now, people that are short the markets, some of them might suffer and take losses because a short squeeze. And then there's people that are going to come late in the game that start seeing this pump and start making investments. And if the market rolls over again, there'll be the dumb money buying at the highs. Yeah. Looking here at 6 grids, 6 major financial stock indexes. They've been in the markets for a long time. These stock indexes are managed by companies. He calls us trade these as stock ETFs. So each chart would be 10 years of history In the current candle, it's not done yet. It won't be done to the last trading day this month. Self-explanatory. Look at the top left in the white. The S&P 500, parentheses, the stock symbol. Past 10 years. Look at the bottom left. And the top. The high, all-time high, was this year. Yep. Right there. And look what we're doing currently for the month. New low. So again, that green candle, the first month of the year, was the all-time high. February made a lower high, lower low. And this month, which is not over yet, huge trading range. The trading range for this month is deeper, more price action than the first 2 months. That's extremely bearish. That's the S&P 500, the major stock index. Financial institutions want to perform equal or better. I say with investors, you want to perform equal or better. That's just one stock index. Here we go with the NASDAQ 100. Yeah, which is interesting, different here. This year, we never took out the high of last year. So this stock index is even worse. And it's also made a new low for the year. This stock index, the NASDAQ 100, is part of the S&P 500. Now we're looking at one of the oldest stock indexes, the Dow Jones Industrial Average. Last month, it made the new high for the year. That was a bearish candle. That was a bearish pin bar last month. And this month, look at this huge red bearish candle. Huge sell-off, new low for the year. This stock index is also part of the S&P 500. So right now, these three indexes, the worst one is the NASDAQ 100, which is high-tech stock index. It hasn't even taken out the high of last year. It's underperforming. The Dow Transports. Yep. Last month, the high for the year. This month, huge red candle, big sell-off. So again, the Dow Jones Transport is also part of the S&P 500. Now we're looking at the Dow Jones Utility, which is also part of the S&P 500. It's a contrarian. It's made a new high for the year. Yep. Higher high, higher low since the beginning of this year. 15 utility companies. What's a utility company? Electricity, gas, natural gas, your phone companies, your cell phone, your landline, your fax, utility company, your internet, your cable, utility company, your water line, utility company. That's a basket of utilities. Yep. So now we're looking at the Russell 2000. This is not part of the S&P 500. It's smaller value companies. First month of the year was the high of the year. And look at this huge sell-off. So as you see, these major stock indexes, some are outperforming. Not the leadership. Yeah, what's usually the leadership has been the NASDAQ 100. But now we have the Dow Utilities made the new high for the year. We have the NASDAQ 100, can't even retest the high of last year, underperforming. Not good. Okay, let's take it to a lower time frame. Took it to the weekly, since the week just ended. Same thing, we'll look at the same indexes, lower time frame. So the other ones were 10 years monthly. This is a 5-year weekly. S&P 500. Yep. Look at the beginning of the year. Didn't do much, just a huge consolidation. And the past several weeks, all lower highs, lower lows. And we are still extremely bearish. These two last weekly candles, big trading ranges from the top to bottom. And the last week that just ended Friday was even worse, showing no signs of bottom yet. Here's a major zone, demand zone, where buyers were here before. We had this high here, huge sell-off, Retracement, broke above it, closed above it, closed above it in strength. Yep. Potential area on the downside. The NASDAQ 100. Also terrible, huge distribution. Big red candle. Last week, we broke and closed below that swing low. Extremely bearish. The Dow Jones Industrial Average. Yep. Also, we took out the swing low, this blue horizontal line, and closed below it. Yep. Again, another big red candle. Very bearish. Very close to this green zone. Potential buyers. Dow Jones Transports. What a difference this one did. It made that yellow candle. That yellow candle is an inside candle. It means indecision. It never took out the high or low of the prior week. Interesting. It's a contrarian. The Dow Transports. You think that's going to save the economy? Wow. Interesting. And the Dow Utilities. I showed you the monthly, but look at here on the weekly. For the week, huge sell-off. Extremely bearish candle. All those people that bought up there that didn't get out, they're wrong. They're trapped. Extremely bearish. And the Russell 2000 weekly. Yep, and they got more bearish. Looks like further downside. And we'll take it to the daily time frame now. Each one would be a 1 year chart, daily candle. See these blue horizontal areas? These are gaps. None of them got filled yet. That's why I haven't removed them. Some got tested, but have not got filled yet. So potential targets on the downside for this stock index. And remember, this stock index has several indexes inside of it. Those indexes may be better or worse. So on Friday's close, we took out the swing low and closed below it. Again, extremely bearish. Also formed, so early in the week, here, that red candle, and then that yellow inside candle, we had a bounce retracement, went into that minor gap. We filled that gap. When we filled that gap, we formed a bearish pin bar. Again, the word is bearish pin bar. And then a huge, again, gap has not even been filled yet here, nor tested. And continue going lower, lower, lower. So that big red candle, followed by a green candle that closed and opened below that red candle, singingly. It was a halfway point. And look at this, big red candle. Minor wick on the bottom. Some buyers stepped in here early. Speculators. NASDAQ 100. Again, look at all these gaps. And again, similar chart. We also filled that gap up there, formed that bearish pin bar. Dow Jones Industrial Average. Yep, got gaps here too. Call that huge selling, panic selling. So interesting, these last two candles had big wicks on the bottom, but still made lower lows, lower highs. Well, this last candle, extremely bearish. It closed below its own midpoint. It closed below that prior candle. That's extremely bearish. Might get a minor bounce. But again, more bearish bias. The Dow Jones Transports. There's a gap from early in the week. Here's a consolidation. And look what it did on Friday. Made a higher high, higher low than that green candle, but closed back inside that green candle. That's bearish. Huge consolidation here. And the Dow Utilities. Wow. Friday, huge trading range. Broke below, closed below that swing point. It filled this gap. Let's remove that gap. And this is Dow Utilities. What's considered a defensive stock index because they pay high dividends. Wow. big dump. People were not even gravitating to that. And the Russell 2000. Yep, that gap also got filled early in the week. And then we made the lower of the year. And want to fake out all these ones that filled the gap, convincing people to buy, speculators, on the wrong side, totally wrong. And we went lower. Now, I showed you all these stock indexes, which are part of the S&P 500. The S&P 500, I also have videos on the sectors. There's 11 sectors. You can outperform these stock indexes. I am investing smartly in the good stock sectors. Well, now that we're close to the end of the month, I'm going to be looking over these stock indexes next week and the week after, as well as the stock sectors, to identify accumulation and distribution to help me decide, do I close out all my current positions in stocks and rotate them into the new leadership, or am I still on solid, good stock sectors? That's with good candlestick reading. That includes volume, characteristics, volume. And also being situation aware, like I said, could be huge manipulation. Thank you as always, spending just a little time with me. That's it for the video. Thanks for watching.